Yo, what's up, boys? Today's November 12th, 2025. Wanted to make a quick video, something kind of similar to how I'm doing things, but today's not mindset. It's not really about mindset. It's more technical, but still a bit broad. Um, it's something new that I'm trying to do. I'm trying to actually do like presentations and then post it. So today's presentation is about how I manage risk and how you should manage risk if you're number one trading an eval or funded. So just to start it off, there's two ways to approach trading, at least within prop firms, either an eval or a funded. An eval is the first stage you take to prove to the prop firm that you're able to trade or that they can trust you with their money, which at the end of the day, no money's being spent on their side. Everything's kind of just simulation, but one of them is like extra simulation and the other one is like slightly less simulation. But my point is, there are two ways to approach on an eval and a funded, two different ways, and we're going to get to that. So, eval count. My personal opinion, I think before you even have an eval, before you purchase an eval, which is, I mean, at least on Top Step, it's like $50. My funded futures, it's like 70 something, and then whatever. But at least within an eval, I would definitely recommend to backtest and paper trade for at least 2 weeks. In terms of backtesting, I think you should backtest at least 6 months worth of data. Um, that's bare minimum, 6 months to a year. I think that's what you should be backtesting. So take some time to backtest that first. Then paper trade, real live market, but you're not risking anything. It's just paper trading. That's all it is. So once you're able to prove to yourself within, let's say, a 2 3 week time frame that okay, while paper trading and already while backtesting, I've proven myself to be quote unquote profitable, then okay, then I'm going to move on to an eval because I've shown myself that I can be profitable within a backtesting account or a backtesting session that's within 6 months to a year, and also real time data paper trading. So it's basically forward testing. You're not risking like any sort of money at all. It's all just fake, like extra simulated money. Um, and yeah, but you have to take it seriously. You have to take the paper trading seriously as if you were risking real money. So before you do eval, do that. Now once you've done that, now you have this comprehensive thought or like mindset, and you know kind of what to do. You're gonna go to an eval count. My personal opinion, I think evals you should risk higher. I think risking higher is okay because in my opinion, I treat eval accounts as sort of like a return on investment. So for me, I risk extra hard, but pause. I risk pretty hard on evals. Why? Because I see evals as a potential to make actual money if I pass it fast. But if I'm on an eval for like 2 months, like some people are doing, then it's just more and more and more and more days in which I'm losing the ability to actually make money. Because with an eval account itself, you're not going to make money. At least with an funded, which is still technically simulated, you're able to make money if you pass certain criterias. So my personal goal, when I'm on an eval account, I want to get funded faster. Um, so in terms of that, on evals, personally, I don't think it's a good idea to do this when you're first starting, maybe. But me, because I already have some sort of experience with trading. Um, what I do is I just risk half of my balance on a trade. But like not like any trade, not just like clicking buy or sell, but I'm just doing half of my balance on an actual A plus or really good setup. And then yeah, so so for me, I have I have a 50K account, for example. So on a 50K account, usually it's $2,000 worth of drawdown. I'm going to risk $1,000. $1,000, so half of your account. And personally, I do a 1 to 1.5, and I usually go break even with an internal high or low. So then at that point, it's really just waiting for it to see if it goes to 1.5. If it doesn't go to 1.5, let's say it goes to 1R, and it just retraces to your break even, cool, whatever, I don't care. I'll just wait for another one. But I've realized that 1.5, I mean, it's $1,000 to make 1,500, and your goal on an eval, at least on a 50K, is usually 3,000. So halfway there, and you just do it again the next day or whenever you find a good setup. So, like I said, that's how I risk. I know it's very heavy to beginners, but at least with beginners, if you are on your first eval, and you've already done these things that I've told you. You've tested your strategy, you've paper traded and forward tested your strategy, not just clicking buy or sell, your strategy itself. You tested that for like 2-3 weeks, and you've been able to prove to yourself, okay, I'm profitable. Let me hop on an eval. What I would do, I would risk about 1%. I think 1% is okay. So just to confirm, 50,000, 50K account times 1%, it's 500. So it's not too bad. You can do 500 1-to-1 or 500 1-to-1.5, and then let's say, for example, 500 times 1.5, 750. So 750. Blah, 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 blah. So you'd have to win 4 times in a row to win. I'm not gonna say you're gonna win 4 times in a row, but on an eval for a beginner, an absolute beginner, it's really just about getting a taste of it and not just wasting all your money in one go if it doesn't go well. Like if you lose both trades and you're risking half of your balance, it's not good. I'm willing to do that because I've had some time trading and where I can see, okay, I'm experienced enough to say, all right, I don't care if I blow an eval or two, if that means I can pass one, and then I'm able to make 5 times that, expense. Everything is an ROI to me. But to a beginner, it's a bit different. So I would say risk about 1%. So that's like 500 on a 50K to make 750, or even a 1-to-2. It's your decision. Depends on your strategy, how you've tested your strategy in terms of like a RR, a risk to reward ratio. But that's how I would go with it. 1%, so 500, maybe a little bit more, 1.5%. But don't go too fast. Don't risk half of your balance. Just go risk on, but not too risk on, at least for your first eval, so you can get the experience with it and you can get a taste of what an eval account is going to feel like. Because at least with prop room traders, we go through that. You have to go to eval and you pass, whatever. It's a process that everyone has to go through, at least when trading evals. So next slide. Funded account. Totally different scenario. Like I said, an eval account is when you're playing with like simulated money, where whatever money you make there doesn't equate to anything unless you actually pass the account and you are funded. So let's say in this scenario, you're now funded. Technically, it's all simulated. Prop firms don't actually risk their capital in which you're spending once you're funded. All they do is they give you a demo account, which is now a funded account, which is still simulated, but whatever money you make from here on there, or here on now, if you meet the criteria, you're able to get paid. That's all it is. But they're not risking their actual money unless they put you in tier 3 live account. Not even going to talk about that, but yeah, you get the point of it. So on a funded account, personally, I like to lower my risk a lot compared to when I trade evals. I risk about 0.5 to 0.6% per trade, especially if this is your first funded. I think that's the way to go. So on a 50K account, that's around 250 to 300. You can even do 350. It really depends on how much you're willing to risk, what your risk tolerance is. And yeah, I think 250 to even 350 is a good range. Why? Because let's say you're losing on average 300 per trade in a row. Now in a funded account, your drawdown is still 2,000. So 2,000 divided by 300 average, you would have to lose nearly 7 trades in a row just to blow your funded account. And I'm not saying it's impossible, but if you have the correct statistics and you've back tested your strategy enough, it's proven to you that it's a very rare occurrence to lose 7 trades in a row. So don't worry too much about that. 250 to 350, it's a perfect range, at least for a 50K account. And yeah, so why do I do that? I do it, number one, because it's nearly impossible to blow your account if you're just risking the same amount, and it's not too much and not too little. It's the perfect range, around 300. It's good. You're chilling. So helps me protect not only my mental capital, but also my physical, capital, money-wise, financially. And yeah, next slide. So super quick video. Takeaway, eval, higher risk. Me personally, I risk half of my balance to make a 1.5. So I risk 1,000 to make 1,500. And then I just do the same for another A plus trade. Don't just click buy or sell, or don't just look at any like C rated setup and take it. Just look for a good setup that you think is good and you think like, all right, I would take this on a funded account. Just take it. And then a funded, it's a lot different. It's like the complete opposite. Lower risk and always A plus setups, or just very good setups that you think will play out. And yeah, just risk 0.5 to like 0.6% of your account. You're perfectly fine. It's almost, like I said, nearly impossible to lose six to seven trades in a row. It's nearly impossible. I'm not saying it is impossible, but it's it's very rare that happens, especially if you're taking A plus setups. So protect your capital and your focus. This is how I go by risking. Yeah, so at least within an eval, I really do think that's the way to go. I know some people, when they start, they just go full throttle, like they let their nuts hang, and like that's cool. But if you have no experience within trading, then I think your first account, you shouldn't even look at it as if you're going to pass it. It's really just like, okay, I'm actively learning about the market. I'm actively learning about how trading is live. So that's really it. Like I said, today's November 12th. If you guys like this video, subscribe, like, leave a comment. Let me know if you guys like have any questions or anything like that. But yeah, thank you guys for watching. I'll see you guys soon. Maybe tomorrow's Thursday, so maybe tomorrow or maybe Friday. Most likely Friday. If I do take a trade, I'll let you guys know. Today I didn't. I saw a trade. I wasn't too confident in it. And then regardless, it went break even. So happy I didn't take the trade. But yeah, that's basically it. Thank you guys for watching. See you guys soon. Peace.